Good morning, everyone. Christy mentioned at the end of Wednesday sessions to think about one or two items that stood out to you. Sarah, could you please open the annotation tool? Please use the annotation tool by clicking on the T for text and typing on the whiteboard or the screen any of the items that you thought were a good takeaway item from Wednesday. Also, if you have any unresolved questions, we would like to hear about those. You can either unmute yourself or enter your question into the chat box. Great. People are typing. Okay, anybody have any questions? Okay, so we had tips for clearing out exceptions, the 4 types of records, deadlines, and that one's so small I can't read it. References to the appendix. Let's see what Joe had. Exception feedback information, very helpful. Love the check marks. Okay, Sarah, can you please export this slide before we move on? Thank you. On Wednesday's session, we reviewed the 4 types of file layouts: pool, loan, sensitive, and various. We discussed how to edit or correct the records, and we went over calculations performed by RFS and noted which fields the issuers were to report the data. We viewed exception feedback and navigation to the different access points. We also reviewed downloading files and stated that the preferred method to retrieve exception feedback was through the download method. We reviewed the different types of file submissions and if the files were accepted or rejected. Christy?
Thank you, Nancy. In today's final session, we will be focusing on these 2 bolded modules. We will get starting with additional reporting requirements. In this module, we will review monthly and quarterly reporting requirements and explain the timeline for additional reporting requirements. Prepayment penalties must be reported by 7 p.m. Eastern Time on the 4th business day. The monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. Loan matching and suspense should be worked monthly. CAVs and WIFIT are reported quarterly. Sarah, could you please turn on the annotation tool? Using the annotation tool, could you place a sticker on any of these reporting requirements that you are familiar with? Perfect. Thank you so very much. That's great. Yes, they're all very important. Prepayment penalties must be reported by 7 p.m. Eastern Time on the 4th business day. However, they may be reported as early as the 1st business day. To report the prepayment penalty in RFS, navigate to the Pool Accounting Multifamily screen, then click on the Prepayment Penalty tab. Input the prepayment penalty amount and the payment date. Don't forget to click the Save button at the bottom of the screen. Also, once all of your prepayment penalties are entered, you may click on the Download in the dark blue bar to export all of your prepayment penalties into a CSV file. This is a great way to ensure that you have reported all of your prepayment penalties that you should report for the current month. The monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. To navigate to this screen, hover over RFS, click Exception Feedback, then click the Summary tab. The monthly certification link can be found in the lower right-hand corner, being highlighted with the red box on this slide. Please raise your hand if this screen looks familiar. Wonderful. I'm seeing a few hands. Thank you so much. Sarah, could you please clear the hands? If my name on the HUD 11702 form is Christy N. Christensen and my name on the token form is Christy Christensen, I would not be able to certify as my names do not match on both forms. In order to complete the monthly certification as an issuer, you must be a signer on the active HUD 11702 form in MAMS. Also, the name on the HUD 11702 and the RSA token ID secure ID token form must match exactly. Like in the example before, my name did not match because one of them had my middle initial. For a subservicer, the user must be a signer on their internal issuer's HUD 11702 form and must have an active HUD 11707 form in MAMS. A quick story. A few months ago, an issuer missed the 14th business day deadline for monthly certifications because there was only one person that had access to complete the certification, and they were out on unexpected medical leave. Therefore, a best practice would be to have multiple backups with an RSA token for monthly reporting certification process. I will now turn it over to Gail.
For the issues, can everyone hear me?
Yes, and we can see you too, Gail.
Okay, hi everyone. Good morning and happy Friday. Thank you for joining us. What I'm going to talk about today is Ginnie Mae loan matching for multifamily and what it is. It's an automated process that we run monthly, and we electronically match the issuer reported data to the agency reported data. So for multifamily, that would be USDA, Rural Development Agency data, and the FHA multifamily agency data. So we take your data and we match those fields to the agency data. If we do not have a match, then it will go on a download. So the matching criteria is for FHA case number and OPB for project loans and mortgage rate for construction loans. And this also applies to rural multifamily, so it's a two-string match. Issuers are asked to resolve their non-matches every month. Again, we match on the case number, the 15-digit case number. If you have questions on what that format is, it is in the GinnieNet user guide, and that does provide you with the format. How would you, does anybody work matching in Suspense in this group? And if you do, how would you resolve your non-matches? You may unmute yourself and speak, or you may type it in the chat. Okay, well, we will move on. If anybody wants to put something in the chat, I will gladly review that and share with the group. To access your matching and suspense, you go into the reporting and feedback system through the My Ginnie Mae portal, and you would select in the RFS drop-down menu matching and suspense, highlighted in the red box. If you use a subservicer, do they do your suspense work for you? Again, you may unmute yourself or type it in the chat. I see Joe entered a yes. I'm hoping that was for that he has a subservicer. I'm not sure. Okay. Matching and suspense, again, is a module of the reporting and feedback system, RFS. The matching and suspense errors are accessible on the Downloads tab. There are 7 downloads on RFS. 3 apply to multifamily. So your insurance matching download, you will want to pull after the 6th business day. We run matching on the 5th business day, and then you can see everything that comes in as a non-match on the 6th business day. You may make corrections between the 1st and the 10th business day. Again, we will run matching on the 10th business day, and you will pull your download on the 11th business day to see any changes. For loan various suspense, you will pull that download on the 7th business day, and you will receive an e-notification if that is applicable to you. Thank you, Joe, for the clarification. Yes, you can hear me, and no, you do not have a subservicer. No worries. Thank you. Any questions? If you have questions, please raise your hand or type in the chat. And I see a hand raised by John Barry. Do you have a question?
Gail, I think his hand has been raised for quite a while. So I think he just took it down.
Thank you. Okay, thank you. No worries. Thank you. Non-matching downloads, again, you will go into the reporting and feedback system, you'll go into the matching and suspense module, and you will see the gray bars across the top. You'll see home, loans, suspense, matching results, and then downloads. So this is where you would pull your downloads. You could pull your insurance download, your various suspense download, and if you have any questions or you need some guidance, there's also a user guide, which is the last gray box on the screen. And just to note, all the RFS modules in the reporting and feedback system have a user guide at the end of each section. If you have suspended records, you will receive a loan matching suspense e-notification. On the screen is an example of what your e-notification would look like. If you would kindly raise your hand if you have seen this e-notification, and what would you do upon receiving this e-notification? You may unmute yourself or type in the chat. Again, if you look at the bottom of this e-notification, we ask that you return all your responses no later than 9 a.m. Eastern Time on the second to last business day of the month. That is when we process all the suspense records. Okay. Matching and suspense, again, the exceptions are accessible on the Downloads tab. we have 7 downloads that are available in RFS. 3 apply to multifamily. Again, insurance matching, which you would pull on the 6th and the 11th business day after we run matching. There is no e-notification. Match to terminated is applicable to multifamily. Again, you pull these on the 6th, after the 6th and after the 10th business days, and you will receive an e-notification. Oh, excuse me, I made a mistake. I am sorry, that is not applicable to multifamily. My mistake. Loan matching suspense, you will receive an e-notification. So anyway, there's 3 that apply to multifamily, and it's the insurance download, the loan matching and suspended records, and I'm looking at the third. Oh, and the third match that we now run around the 25th calendar day. Quarterly verification reporting in RFS. The issuers must submit a verification between the 6th and the 15th business day of March, June, September, and December, stating funds custodian meets the requirements specified above. This can be reported in RFS on online entry or in a file upload. Separate certification for each fund custodian pursuant to the Master Agreement for Servicer's Principal and Interest Custodial Account Form HUD 11709. There must be a separate verification for each fund custodian pursuant to the Master Agreement for Servicer's Escrow Custodial Account Form HUD 11720. Raise your hand if you have a reminder in your calendar for the CABS reporting. Okay, thank you, Erica. Thank you, Katie. Again, in the RFS module, you'll go into Pool Accounting, Multifamily, and you will select Quarterly Verification, the box in red. Inside the Quarterly Verification, this is the screen you will see. We provide you instructions. The data will be pre-populated for you. You just enter your issuer ID, should click.
This is Nancy, and I'm going to do this. So that's okay. Hold on.
And I will turn this over.
I got to make this
to Christy.
Okay.
Thank you.
There we go. In 2006, the IRS published reporting rules for the widely held fixed investment trust, which is called WIFIT reporting. Ginnie Mae provides issuers with a method to report the required information. The standard file layout to report to the IRS is located in Appendix 6-18, and at the bottom of this slide is a link to that appendix. Data is due the 10th calendar day of April, July, October, and January, and on the slide it will show you which months should be reported for, like April, January, February, and March is April, May, and June for July. Issuers also have 5 days to make any corrections to inaccurate or incomplete reporting. Issuers have the opportunity at year end to correct the last 13 months of data, which would be December to December. Ginnie Mae will publish all of the WIFIT information on their tax and factor reporting website. Ginnie Mae is also prohibited from advising the public on specific tax matters. Should you have questions, you need to consult your own tax advisors on any of, for any requirements on reporting the data. To access WIFIT, You would hover over the RFS tab and it will open up to show there's a module for WIFIT. You may manually report data under the Issuer tab or use File Upload and select the radio button WIFIT files. The WIFIT module also provides several feedback reports of the data that you submitted. Summary report, an exception report, summary and detailed compliance, along with a late submission report. Once you have reported data through RFS, you must continue to report that data every single quarter. Excuse me, one moment. An important task for issuers to perform annually is to upload the company's annual financial documents. And this is in accordance with the MBS guide and requirement in Chapter 3. These documents must be uploaded in RFS, file upload, using the Independent Public Accountant radio button, or it's called IPA. The documents are due within 90 days of the issuer's fiscal year end. Appendix 6-20 will provide step-by-step instructions to name the document and upload the document. All documents must be in PDF format using the specific file names. Submission dates of annual documents depends again on your fiscal year end. Raise your hand if you know your company's fiscal year end. Oh, is there any hands raised? Okay, I don't see any hands raised. I have a question.
Yeah, I do see a few hands raised, Nancy.
Well, why can't I see them? Oh, there they are.
It seems to be a little delay. Yep.
Okay. Oh, great. And Joseph had a question. Do all issuers have WIFIT reporting requirements? That would depend on if you meet the requirements, which you would have to go in and review the IRS document. Some issuers do not use the Ginnie Mae website or tool to report WIFIT data. They report it using another method. Again, this WIFIT information was developed because issuers were having a problem reporting the required data. Okay. Sarah, can you please clear the thumbs? Sarah, would you please open the Annotation Tool? Using the Annotation Tool, please put a sticker on the option you would select to upload the financial annual documents. While y'all are still placing your stickers, I would say in the month of February, our number of calls double due to the questions on how do we do annual documents. So a lot of issuers, because it's a once a year activity, a lot of times a different person does it every single month and they're kind of really lost. So, we always are open to answering any questions to help the issuers out. Thanks, everybody. That's a lot of stars. That's great. Sarah, can you Please close the Annotation Tool. And now I'll turn this back over to Christy. Thank you.
Thank you, Nancy. This slide shows a list of best practices for issuers. Again, 100% of pool and loan data must be reported by close of business on the second business day. All E and C level exceptions related to pool and loan records must be cleared no later than 7 p.m. Eastern Time on the fourth business day. There should be a consistency of data reported in RFS. The case number reported on the loan record should match the case number reported at origination. Issuers are fully responsible for meeting reporting timelines and accuracy of data reported by subservicers. Adhering to your company's established cutoff date. Ensure the correct liquidation removal code is reported in RFS. Analyze and correct RFS exceptions per severity level requirements and deadlines. Review e-notifications daily. And as I mentioned earlier, have multiple backups for the RSA token for the monthly reporting certification. Sarah, could you please turn on the Annotation Tool? Could everyone please place a sticker on the practice that you think is most important? Okay. Wonderful. Get all those great stickers. That's great. Thank you, Sylvia. Yes, we love all the stickers. It's wonderful. Okay, thank you so much. Sarah, could you please post the first polling question? Thank you. So our first question today is, which screen do you use to complete the monthly report certification? Looks like we've got lots of folks voting. That's wonderful. We would like everyone to vote. Okay, I'll give it a few more seconds. And I will go ahead and end the poll. And it does look like most everyone got the correct answer. The RFS monthly summary screen is where you would go to report the monthly certification, and that would be a separate link in the bottom right-hand corner of that summary screen. Sarah, could you post the next question, please? So when are the annual financial documents due? Is this what Nancy spoke about just a few moments ago? So which of these would be the best answer? I will give that just a few more seconds. Okay, I'm going to go ahead and end the poll. So the correct answer is D, because it would be 90 days after your company's fiscal year end. And so, yes, even though they are due yearly, but they're not like calendar yearly. They are due 90 days after your company's fiscal year end. Okay. And Sarah, could you please post our last question before we go to break, please? So when does an issuer receive a notice of terminated loans? I believe this is something that Gail covered within the matching and suspense. I'll give it a few more seconds for everyone to get their vote in. I'm going to go ahead and close the poll. So the correct answer for this is the 10th business day, which most people got correct. Sarah, could you please close the polling questions? Thank you. We will now take a 10-minute break. When we reconvene to continue training, I will be presenting. Welcome back from break. We will now continue with cash and reconciliations. In this module, we will review cash, including cash on hand in the correct bank account, and how to update master agreements. Also, we will review reconciliations, explain how to submit CAVs, and discuss reconciling requirements, and review the pull to security and test of cash processes. Reconciliations of cash in TNI and PNI accounts. This consists of bank account statements, your internal servicing records, and the information you reported to Ginnie Mae for your monthly activity, which totals are on the summary screen in RFS. Keys to quality Ginnie Mae monthly reporting are following MBS Guide Chapter 16 for custodial accounts, have Ginnie Mae program knowledge, reconciliations, test, and internal servicing controls. Cash management includes Ginnie Mae's access to draft funds from your account, following Chapter 16 custodial account requirements, funding PNI shortfalls, completing monthly test of expected PNI recons, reconciling mortgage collateral to securities outstanding, which is also known as pull to security, and completing monthly bank account recons. Miscellaneous items would include, but are not limited to, payment querying and disbursement querying internal recons. Please give me a thumbs up if you perform the bank account recons. Okay, I see a few thumbs. Thank you very much. Sarah, could you please clear the thumbs? It is very important that all Ginnie Mae issuers ensure they do not have any restrictions in place that would impact Ginnie Mae's ability to draft funds from their central PNI custodial account on draft days. Please ensure that the bank has not placed any ACH debit blocks. Also, Issuers should have a procedure in place for communicating with Ginnie Mae and its central paying transfer agent, or CPTA, if any problems arise. This includes available funds for guarantee fee drafts. Another best practice is 1 business day prior to the draft to confirm that the account is fully funded and there are not any holds or system limits. On the day of the scheduled draft, confirm funds have been swept from the designated account. If the draft has not occurred, contact your custodial bank directly. Also, provide your Ginnie Mae account executive the plan to remedy the draft failure. Using a thumbs up, please let me know if your company has a process to ensure that ACH bank accounts are fully funded on the day of the draft. Okay, I'm seeing quite a few thumbs. That is excelente. If your company does not have a process for this, please ensure that one is created. Sarah, would you please clear the thumbs? Your collection clearing account or payment clearing is an optional account. This account can be used for Ginnie Mae and non-Ginnie Mae funds. This account needs to transfer to the Ginnie Mae P&I and T&I accounts within 1 business day. You may recover corporate advances provided excess funds are restored to custodial account from this account. Also, this should be a zero balance account, which means you should be able to show detail of every cent that is outstanding in this bank account each day. For liquidations, the clock starts when the post date of deposit on the bank statement. Since issuers do not post payments received after hours until the next business day, they have 1 business day from the date of the post or deposit. Ultimately, the funds need to be deposited into the Ginnie Mae P&I account within 2 business days of receiving the funds. P&I custodial accounts requirements are as follows. Ginnie Mae funds only, a single non-interest bearing custodial account, may contain funds for more than 1 pool, a HUD 11709 form must exist for each account, must be maintained at a financial institution capable of ACH, the bank recons must be completed timely, and it must meet the bank rating requirements for CAFs. Please raise your hand if you manage these bank accounts. Okay. I see a few thumbs and hands. That's great. Sarah, could you please clear the thumbs and the hands? The P&I disbursement account requirements are as follows. May use a separate disbursement account, must be non-interest bearing, a zero balance account, maintained at an ACH capable institution, must be only Ginnie Mae funds, and only 1 Ginnie Mae issuer ID per account, and a HUD 11709 must exist for this account. T&I custodial bank account requirements are as follows. Account may be interest-bearing, must be Ginnie Mae funds only, must have a HUD 11720 form for each account, bank recons completed timely, which is within 30 days of the issuer's cutoff, must have a separate custodial account for 203K FHA funds, and separate escrow account for any other funds per FHA and RD or USDA requirements. P&I accounts are subject to custodial account verification, also known as CAVs. It is only required if aggregate P&I payments due from the borrower is equal to or greater than $100,000 in any 1 month as measured by the fixed installment per Appendix 6-19. Also, project loan accounts, whether required by FHA, RD, or Ginnie Mae, for any project equal to or exceeding $100,000 are also subject to these requirements. Agency rating requirements state that the institution must have a rating that meets at least one of the following. Institution serving as funds custodian with assets of $30 billion or more must have a short-term rating by S&P of A3 or better, a long-term by S&P of BBB or better. Short-term bank deposits ratings by Moody's of P3 or better, or a long-term bank deposit rating by Moody's of Baa3 or better. Institutions with assets less than $30 billion must have an IDC rating of 125 or better, or a C+ or better by Kroll. Depository institutions must meet the following 3 requirements. Must be insured by FDIC or NCUSIF, must be rated as well capitalized by its federal or state regulator, and have a rating that meets or exceeds at least one of the agency rating requirements specified. It is acceptable for the funds custodian even if it is rated by another organization below the minimum level specified. CAVs is due between the 6th and 15th business day of March, June, September, and December. P&I temporary shortfalls can be caused by late payments from mortgagors, NSF checks from mortgagors, and incorrect advanced calculations. Non-recoverable corporate advances permanent shortfalls are caused by curtailment adjustments, loan payoffs, foreclosure liquidations, and T&I shortfalls. As your last homework question, do I have a volunteer that would like to share how their permanent shortfalls are funded? If so, please unmute yourself and share. Anyone? Okay, we will go ahead and move on. Using the Annotation Tool, could you please place a sticker on the method your company uses to fund P&I shortfalls, if you know? Companies may use the corporate advance, which are issuer funds, excess funds, which are unscheduled recoveries of principal on the pools, which may be found in MBS Guide Chapter 15-5, or the pool advance agreement, which use bank funds. Also, Appendix 6-1 must be completed for this. Wonderful. Thank you for all the wonderful stickers. Corporate advance looks like that's the winner here. If you use corporate advances to fund your P&I shortfalls, ensure you advance the funds to the P&I account prior to the Ginnie Mae ACH draft on the 15th calendar day. Ensure you recover the corporate advance properly and document all advances. To calculate corporate advances, take your P&I bank balance minus additional principal payments and liquidations not passed through until the following month, minus prepaid installments, minus guarantee fee, which gives the adjusted bank balance, then subtract the amount due to the security holders. If this number is positive, you have an overage, and if this number is negative, you have a shortage. Excess funds are unscheduled recoveries of principal on pools received during the current month that are not passed through until the following month's payments, and also prepayments. Please see MBS Guide Chapter 15-5. Corporate advances using excess funds are unapplied funds, service fees, and pools sharing the same custodial account. Corporate advances using excess funds are calculated by taking the P&I bank balance minus guarantee fees, which gives you the adjustment bank balance. Then subtract the amount due to security holders. If this number is positive, you have an overage, and if this number is negative, you have a shortage. Using the thumbs up, please let me know if you review your test of expected P&I. Test of expected P&I is required on every pool. It is performed by the issuer. Provides minimum dollar amount in the P&I account. Total of all pool cash shortages funded by the issuer, and you may not net the cash shortages with the pools that have cash overages. A best practice would be to fund your P&I account for any positive differences in one transaction and retain the pool level documentation for audit purposes. Then withdraw funds from your P&I account for any negative differences in one transaction and retain the pool level documentation for audit purposes. Also, the test of expected calculation is only accurate when the pool to security recon is 0. Well, thank you. I see quite a few thumbs there. Sarah, could you please clear the thumbs? Here is a test of expected P&I recon. Most servicing systems will complete a similar test of expected P&I recon like the one displayed. Using the thumbs up, please let me know if you review your recon of mortgage collateral to securities outstanding or your pool to security recon. The pool to security recon is required on every pool is performed by the issuer or your servicing system. If the pool is over collateralized, the adjusted pool principal balance is larger than the security balance, and you will need to recover unscheduled principal from liquidations or curtailments. There is a $100 tolerance per pool if no unscheduled principles of recovery. Recovery of principals. Under collateralized means the adjustment pool principal balance is less than the security balance, and you will need to remit principal, most likely by a corporate advance. There is a $1 per loan per pool tolerance with a maximum of $50 per pool. Also, with these being multifamily pools, each project is different. Therefore, if you have passed through too much money and now have a pool to security difference, please contact your Ginnie Mae Multifamily account executive for guidance. And I see quite a few thumbs. Thank you so much. Sarah, could you please clear the thumbs? Here is a pool to security recon. Again, just like the test of expected recon, most servicing systems will complete a similar pool to security recon report like the one displayed. Here is a sample format of the P&I account recon. Most issuers build this form in Excel. Bank account recons must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. The cash flow method is the balance at the end of the previous reporting month plus the daily deposits minus disbursements, which equals the ending P&I cash book balance. This is reported in field 12 of the pool record and is displayed at the bottom of the pool screen. An important note, all adjusting items on the recon must be completely resolved within one of the next 2 reporting cycles. If you have outstanding unreconciled items, it may result in an audit finding. Here is a sample of the T&I account recon. Like the P&I recon, most issuers build this form in Excel. Just like the T&I recon, just like the P&I recon, the T&I bank account recons must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. T&I funds are required to be deposited in the Ginnie Mae escrow account within 2 business days, which is 48 hours of pool settlement. The escrow balance for individual loans is reported in field 29 of the loan record. The escrow balance for all loans within the pool is reported in field 11 of the pool record. An important note, all adjusting items on the recon must be completely resolved within one of the next 2 reporting cycles. Give me a thumbs up for yes and a thumbs down for no to indicate if you would ever report a loan without a T&I balance. Actually, here I would expect to see quite a few thumbs down because a T&I balance on loan level for multifamily loans are actually not required. I see that John is typing. John says we have 241 supplemental loans that do not require T&I. Thank you so much for sharing, John. Okay. The large red box on the pool activity screen shows where all of the bank account balances are reported on the pool level. These balances can be reported on the RFS file or entered manually online. The Save and Sum Pool button at the bottom of the screen in the red box needs to be clicked when any information on this screen is updated or if any loan level fields are updated, as certain loan level information is moved to the pool screen behind the scenes. Also, if you click the small plus sign in the bottom left-hand corner, the custodial bank information is displayed. This is where you would update any bank account numbers or ABA numbers. Ensure you click the Save and Summarize button if you make any updates on this screen. I will now turn it over to Nancy.
Well, that took a while to get my camera working. Sorry. This slide provides a list of success factors. These factors are normally met when an issuer has a plan or a checkoff list for monthly activities. It would include any items that would fall under monthly, quarterly, or yearly reporting. Sarah, please pose the first polling question. What is the time limit to complete bank reconciliations? This would be PNI, TNI, any bank account recon that is required by Ginnie Mae. Sixteen people have reported. 17. All right, the correct answer is B, 30 days from your cutoff date. Gonna end poll and broadcast results. Did that work? Okay. Can you post this next polling question? When is an issuer required to submit custodial account verification? People are changing their answers and still reporting. Give it just a second more. Okay, the correct answer is C, when the FIC equals $100,000 or more. Okay. Sarah, please post the next question. What is the purpose of the pool to security recon? Long name, reconciliation of mortgage collateral to security outstanding. Great, we had everyone pick B, which is the correct answer. Okay. Thank you very much. Does anyone have any questions for us? Either open your mic or type it in the chat box. And while you're doing that, I wanted to tell you that after, well, the presentation has been posted. Sylvia posted a link at the start of the session today, and it's already on Ginnie Mae's website. There are some slides after this slide. Appendix A has the workflow slides, and it also has a list of sums and calculations.
Nancy,
yes.
Excuse me, this is Sylvia. Why don't you just go ahead and take a look at those slides? We can always come back to the Q&A slide.
Okay.
But you can move forward.
Okay, so here's Appendix A, and we're just going to show the next 3 slides is the workflow slides. And I think we asked earlier, could have been session 1 on Monday, if anyone actually used these slides for their workflow, and we had a lot of positive feedback. And here is some additional information on Rfs and Summarization. It will tell you the record, whether it's the pool or the loan, the field number and name, and it will give you the Rfs calculation based on the data that's reported. So the So the loan record, field 11, loan FIC, is going to be compared to the pool record FIC, and if it does not agree, actually an alert will generate. So anyway, there's 2 slides on this to help you understand what goes on behind the scenes. I'm sorry, 3 slides. 4? Okay, sorry. Appendix B is really important, and everyone, please review Appendix B. We're going to talk about the FIC adjustment on a foreclosure claim, and then if you have a scheduled FIC adjustment on your loan record and the process you need to follow. When you apply foreclosure claim funds and you keep the loan active in RFS, you need to recalculate your FIC. I believe the requirement from FHA is you need to continue to pass through scheduled principal every single month. If you do not recalculate your FIC adjustment, you will be, say if your FIC is $40,000 and you apply claim funds, the next month you'll be passing through like $30,000 in principal and maybe $1,000 in interest. So we want to recalculate the FIC to keep the mortgage principal in line. So there are a couple of slides on here that give you that process, tells you exactly how to perform those. And for any process, if you are unsure, please contact your issuer analyst. So there's a couple of pages on that. Now this is the liquidation schedule, and it will it has the numbers 1, 2, 2A, 1A, and it will go back into the procedures and tell you what will report on each line. As you can see on, let me make this bigger, I'm sorry. We have a payment due date of 8/1, and then we have a 9/1 with the schedule information. After the 9/1 payment, they applied the foreclosure claim funds that were received and kept the loan in the pool. At that point, the FIC was recalculated. If you will notice under the interest due column right beside 2A, the amount of interest from the previous month went from $31,000 to down to $2,900. So this is the big adjustment that is made. If we hadn't made that adjustment, the scheduled principal would have been around $30,000. The next slide is additional information on reporting the adjustments. And this last slide, if you have a pool that's scheduled for an FIC change, you need to report the change to the multifamily group 30 days prior to the effective change date. And here's the procedures or the process that you need to follow to report the change correctly in RFS. The above procedure will create a critical pool 104 alert for 1 month as long as the FIC on the loan is different than the FIC on the pool record. Excuse me. And so Sylvia, that's the end of the session.
Okay, great. And so if we could just put that Q&A slide back up, just so that people will have the contact information for our facilitators in the event they have questions.
I know there was, yeah, I know there was an easier way to do that, but there you go.